Hey everybody, Brian here from quantlabsnet.com. Today we are going to show you an updated, majorly refreshed update on how I've now done a new Python script that will capture using a new data source for equity data, ETF and US stock only, just because I'm lazy to convert from whatever to whatever, from US dollar to whatever I want to trade in. So as a result, I'm just focused only on US now. And one of the things I want to show you is some of the stocks that I've seen looking pretty good, and why I choose these, and just looking at a rough eyeball from the charts, and just to show you what I now with this new script, some of the new things I can do with it. So in here, this is the ETF that we've got, where it comes from. This is the ETF name it comes from. This is the holding of that ETF. I've talked about that many times. This is the holding name of the company, US based only, US stock list, I should say, on the industry. And then, of course, the Sharpe ratio and the last closing price. So these are the sort of factors I'm looking for when I'm going into doing more of a long-term holding position. So first off, I've marked them off. Also going to use TradingView as some of the picks here. Okay, so let's go through the first one I marked off here, which is Coreweave. Couple things to note here: it's a fairly new company, so the Sharpe ratio is excessively high, and the thing is that already the price is very high. Let me show you why I like to pick stocks that are performing, that are under $100, okay, or thereabout, or just above $100, let's say, US. So we have Coreweave here. Let me show you the chart here, CRWV. Okay, so we're using now TradingView for this, CRWV. Okay, so in here, this is a fairly new stock listing. You can see here's a lot of volatility because of these red charts, or these red bars. This is daily, and depending upon the performance of the stock, I kind of get nervous when I see these long-term drifts down. You might see them in other charting patterns, so I wouldn't choose Coreweave for this. Okay, it's too expensive. I personally think it's too late in the game for an IPO for that. So that's a big no for me. Now, I only marked it off because of interest. Okay, so the next one we have is a company called Rocket Labs. Now, I'm sure you know about Elon Musk and SpaceX, the problems they're having. So people are looking for alternative aerospace companies. You can see here, aerospace and defense full 3 times from direct Leon provider on that ETF. Here is the good thing. The Sharpe ratio is at 11, but the stock is still fairly cheap. So this is RKLB. So let's check out their chart. From my point of view, you can see here, again, this is probably a fairly newly listed stock at $6 back in September 2024. And this thing's now skyrocketed to $35. So this thing has potential to really move up. And a lot of people may not know about it. I don't know. I don't listen to financial news anyways. But these are the sort of things I'm looking for, are these dips. Specifically on April 7th, how did this stock handle it? Was there enough momentum in the stock to kind of counteract that really big drawdown because of the tariff day, because of President Taco, known as Trump? And you can see here it's at 35. So this could be a very good long-term stock to have. Okay, just so you know, these are the things I look for. All right, let me just clean this up. All right, so that's a good looking stock there, Rocket Lab. All right, so the next one I want to show you on purpose here is from ARK. I've talked about ARK in my last set of videos. Good provider, I think, of uh, early stocks out there. This one's Palantir. So let's talk about Palantir here. So if I go into Palantir, I used to hold it and I got rid of it. And here's why. Um, when you look at Palantir, okay, long term, it may be okay to own. But when you look at, let's say, year to date, it's these down moves. There's quite a few red bars here, and there's just something going on with Palantir. There's not a lot of support in this chart, and I'll show you why there's better stocks out there. So this is at 132. Um, so that's probably going to be one of the more hyped up stocks that you know of, but probably not one of the better ones. Let me show you this one here from eToro. Again, that's on ARK as well. So that's at $64 and has a Sharpe ratio of 7. Early days for that kind of stock. But when you look at eToro, ETOR, okay. So here you can clearly see it's newly listed, big pump up, and it just draws down. It's too volatile for me. I wouldn't touch that. Okay. I probably had a lot of hope in that stock, but just didn't do anything. Here's another stock here, Robinhood. This is another interesting. I'm not a big fan of the broker, but if I can make money with it, why not? Okay, so here, Robinhood markets. You can see here, didn't have a big drawdown. Okay, year to date, that's pretty good. Very little drawdown. But look at how it's moved from $30 or thereabouts $30 to $99. That's a big move. Okay, this is a long-term stock to have in your portfolio, I think. And again, that's right around price point I want. Will this be a late trade? Well, you can always go back into the all, and I'll let you decide that. So it started gaining momentum a year ago, and look at how it's performed. It's done very well. So I think it will continue to do well, even if there's a bad time in the markets. This could be a good stock to own from $10 to $100. Pretty good. That's like a Bitcoin move. Okay. So going back to this list, that's a pretty good one. So we've got here all these other companies here. Roblox. Now, this one I've seen a lot on. Again, it's listed on ARK again, on the gaming. Gaming's pretty good for recession times. So RBLX is the ticker. So RBLX, let's check out that one. All right. So Roblox, again, similar move, not as strong, but if I look at the year to date, very little, it doesn't draw down. You see what I'm saying? And it's gone even from its peak from $50 to $102. That's pretty incredible. Another very good long-term hold to have in your portfolio. Now, again, I'm not a financial advisor here. I'm just showing you what I'm seeing in the charts. Okay, and what I use for my own level of, call it long-term investing, I've been really neglecting for the last 2 years my portfolio, my little active portfolio, I should call it. And it's not done very well. A lot of reasons for that. Anyways, now this one came up, and one thing I want to mention here is with this new script I've generated with a new provider, you know why I keep these portfolios or these stocks not having a unique listing for that one stock? I want to see how many ETFs are holding these stocks. Now remember, if you watch my last video, you'll know that the ETF that's chosen here is more than an annual Sharpe ratio of 2. Okay, so these are very strong performing ETFs, and all I've gone in is with automation, using automation and everything, and now AI. I've gone in and extracted out all of the holdings of those ETFs. And each ETF holding I get, I'll measure its annual Sharpe ratio. And you can see that's how I'm getting the winners. So the amount of high-performing stocks that I see in all these various high-performing ETFs, those are the stocks I want to own. Not the Mag 7, because they've proven you're not seeing them listed here. I've gone through, we're at 49 right now. and you can see how many different stocks we have, unique or whatnot, over 300. Okay. Some of them with a Sharpe ratio of 1.5. So they're kind of strong, but these are the top performing ones. So let's check them out as usual. So here we've got a company called Sportradar, SRAD. So I want to show you some things I'm also looking for in these stocks. Now, if you're a swing trader, this might be an okay stock to have. It's a nice steady eddy, no drawdowns, not a high performer. But if you can sort of hold out on these drawdowns, this might be an okay stock to own. Okay. Not the best, strongest stock to own. There's only two ETF holding it, but something to consider. Okay. Now, here's another stock, Intuitive Machines. So we got three ETFs holding it. Now, this is another aeronautic space ETF. It looks like, but I do believe this is a stock I wanted. I want to show you this one because I know this stock. It's Canadian. Again, it's trying to be another Starlink alternative. Telesat. So that's TSAT. Let's put that in here. Very conservative company. A lot of people may not know about it, but Telesat right here. Again, this is why I wouldn't take it though. But to consider it as a good performer, as an alternative to Starlink. There you go. Very strong performer, and it's starting to develop some strong momentum in there. That could be an interesting stock to own. Telesat. All right, so that's Canadian as well. We've got here some other interesting stocks here. And again, if you look at that Telesat, I just want to remind you, it's under $100. So if that really performs, that's an early day stock that could take off long term. And then down the road, you'll hear all the news media talk about it. All right, so these ones are overpriced. There's also in here, if you look, you'll find Spotify in here, and it's really right here, Spotify. Look at that price, $7.22. That's pretty crazy. So let's check out that stock. I'm just showing this. I do not want to have any interest in this stock. It's just too expensive. Okay, I would rather hold a equivalent of a Telesat that's doing well. It holds its own. But remember, the larger stocks you buy, that ties up other capital you could use and deploy for better performing, potentially longer performing stocks that will do well in a bad economy or a bad market. When you look at all these companies, these probably are not very dependent on the economy. Okay. They're just not. Like Robinhood, people still trade on Robinhood no matter what the economy is. People will still be involved in these companies, I believe, regardless of where the economy goes. These are, from what I'm seeing, are good companies to have. So coming back to where we were, okay, so we're now getting into more conservative names. So in here, you're seeing there is some gold performers in here. This one, like this one, GORO. Okay. Question is, you hear about all of the gold performers are really good to have. This one I used to hold, PM. Okay. This one was good months ago. It's a Philip Morris, the tobacco company. Sometimes the sin companies do okay in this space. You can see it's done okay. Back here I might have owned it 114, 150. Now it's at 177. So the companies involved in, we'll call it sin, can do well in recessions. Medical as well. You'll see Cardinal Health in there as well up here. Yeah, that's kind of pricey from my point of view. Philip Morris is now expensive, but that would have been a really good one to own. Then we get into the Netflix. look at that price, $12.93. I don't think so, but that's usually the FAANG, the original FAANG, big tech companies. This one's kind of holds its own. This one, Virtu, I'm going to show you. This is one of the HFT stocks out there that's involved in high frequency trading. So Virtu Finance, again, this is why I don't hold it, because you'll see virtually year to date, you can just see those big dips. This one especially right here as well. You don't want to hold those. Okay, over the long term when the markets get challenged. Okay, so those are some of the things I'm looking at. But now we're getting into the more conservative companies. Here's a Canadian bank here. CM. This one's not too bad actually. CIBC, CM. Interesting stock. It's cheap on the U.S. stock exchange from $54 back in, and it's held its own really well. Very little drawdowns. This is an important thing to know about. But look how it's performed. It's gone from $52 back in late April. Now it's gone up 50%. Pretty strong. So CIBC is a good one to have. All right. Let's see here. That's a conservative bank as well. Another interesting one is Cloudflare. So you got another tech name here that we know about. So that's net symbol NET. Let's see this one. So this one's another bad one. Big drawdown, kind of recovering, but very bad on the drawdown. So I wouldn't hold that. That's what I look for. It's got the momentum when it holds it, but when something challenged in the market, it drops. And this is the big sign of that. You really don't want these kind of companies that have a drawdown, like a severe drawdown. I'll just show you the previous one, that CIBC. That did pretty good. Another one here is silver. Okay. Gold Resource Company. This looks like a penny stock. GORO. Let's try that one. So again, this is my question about the so-called gold miners will do well. From the gold bugs on YouTube. This is the proof here. You can see here when it performs really bad on bad days. How often is that? And when it does, it just drifts back. This is the kind of stock, even though it's a penny stock, it will give you a heart attack when you see those drawdowns. I just wouldn't want to take that risk. So that's the only one that the performers that are gold related. Okay, here's another interesting company, AT&T, conservative. So we've got the star performers, and their newer companies as well. But here's an old company that's doing okay, AT&T. See how this one's doing. Boom. Don't know why TradingView is so slow. So right now you can see here it's at $21 back in January, moved up. It's held its own pretty good. Now, it's kind of gone range bound. If you want my opinion, this would probably be a great stock to mean revert based in its performance. And again, in the world of AI, you can build a strategy just trading this at a high frequency level and just probably do very well with it. It's classic mean reverting when it's really range bound. But it will go up, but not the right stock for that in a long-term portfolio. All right, so continuing along here, we've got some other interesting. So we have here another resource company. We'll call it PPTA. Okay, I just want to show you these just for kicks. Just to show you that you got to be careful what you listen to on YouTube, especially if it's a doom scrolling, doom and gloom stuff. PPTA. So here's PPTA. Yeah, you can see the drawdowns here. It's very volatile. Big gap down here. Wouldn't touch that. Okay, and that's Perpetual Resources. Resource company. Materials. Okay, so this one is IBM. This is an interesting one. Old technology doing well. Check it out. it is an expensive stock, but it seems to be doing okay. And again, when you look for those drawdowns, how does it perform in a drawdown environment? Not bad. Not bad at all. Okay, that's year to date. Okay. Very little drawdown, and it's moved up and very good in holding its own on the drawdowns. That's a key factor right there to stay in the game on these long-term type of stocks. Another one here, we have CME Group. That's the CME that you pretty well trade on. And yes, they are a stock. CME Group. Let's see here. This is another, yeah, this is a very good one. You're going from, okay, 226 to 275. That's a very good return year to date. Has not drawn down. And again, people will continue to trade on this company. Why? Well, you're trading on, no matter what happens in the economy, you're always going to be trading on CME. So that's one of those positive stories there. CME, okay, that's fine. So we have here in Curtis Wright, very expensive stock. They're an industrial company, again, conservative. So this is CW, just as examples. This is the sort of thing your professional stock advisor will not do. So you're getting a good blend of conservative stocks holding their own and doing well. So you can see here, this stock in around 320, okay, is not drawn down at all, virtually a little bit. It's taken off from 260 to 479. Interesting company to know about. All right. So these are the stocks that I like. Deutsche Bank, who would think? Another conservative company out of Germany, a bank, German bank. Deutsche Bank. I don't think it's as performing as well as CIBC. Not a lot of volume in here, but the drawdown's not too bad. But very little volume because the movements. Actually, it's a conservative company, so it's okay. It's okay. It's only at $29. So, and as you go down the list, the less performant the stocks are, but there are going to be people. Now, okay, very important. I picked this one on purpose. This is EPR. This is a property company. I have no idea who they are, but they do real estate. Everyone tells me, how do I get in the real estate game without owning real estate and playing landlord? When you get calls at 3 a.m. that their toilet's plugged up. Okay, this is one of those companies. EPR. Okay, so this is how you get involved. They may actually, you can earn income from these companies as well. It could be royalty, it could be dividend income. I've not gone deeper than that. So you can do that on your own as well. But what's the name of this company here? So EPR. Okay. So EPR Properties. EPR Properties. Let me just see here. Okay, I'll just use the ETF as well. Yeah, EPR. So it's on the New York Stock Exchange. It's a private equity. I don't know what this is, but interesting. Big drawdown there. Wouldn't do it. But let's check out the ETF here. Okay, because I want to make sure. So right here we have Vanguard short-term bond index. Yeah, so forget it. Right now, real estate's not the place to go. Otherwise, you'd see them all over the place. Here's another one. Cisco. I've seen these guys over the years. They may have some good dividends. I can't say. Tech company as well. So again, drawdown pretty steep. Okay. So right there, $54 to $68. Not bad. But this is where I get concerned on those drawdowns. Okay. Is there anything else? Oh yes, one more Canadian bank, TD, Toronto Dominion. And that one makes sense because the banking system in Canada is considered one of the safer banks in the world, actually. That's why they're probably performing pretty good. Look at this, another really good bank that has not really been hit hard on the drawdown. Um, $75 all the way up to 101. That's pretty good performance for a very blue chip Canadian bank stock. I don't know. You tell me. What else we've got here? Nasdaq itself. Okay. So NDAQ right here. I think this is the last one. NDAQ. Okay. Okay. So this one drawdown pretty severe, but $64 to $89 in that performance is pretty good. So if the economy or markets go crazy down again, you know what not to hold. All right. So I think, yeah, well, there's one more. Johnson Controls, conservative again, JCI. Uh, Again, these are probably the first companies are very good, but always look for those drawdowns. Very important to know when the markets go bad. Robinhood, all them. Okay, Johnson Control, not bad, performing pretty good, but it seems to be running out of steam here, momentum. So, something to be aware of. Let me pull up those companies again just to make sure we fully understand what we're. Okay, so again, Rocket Lab. Let's see how that's performed. The drawdowns. These are the RKLB, I believe. Rocket Lab. Yeah, it's not too bad, but again, there is drawdowns there, so I'd be kind of careful with that company. What else was there? Yeah, another one that I did like. I mentioned Palantir. The other one here is Robinhood. So let's see how that one's done. Does perform well. It's a high performer. Uh, Robinhood. Boom. Doesn't move. Very good stock to have. All right. So there you go. Some nice stocks to have. Hopefully this will help you out. If you want to know more, I'll be putting all of this on my analytics for my members. And that's chargeable. All right. Thanks for watching. Have a good day. Bye.